Hi there, welcome to Neppy Invest. In this video, I am going to be discussing Limeade, not to be confused with Lemonade, the drink, or the insurance company in the United States, or to be confused with Lululemon, another company in the USA. I believe that's a clothing company. It could be completely mistaken. Or to be confused with Band-Aid, the adhesive bandage, or the band that was set up in 1984 to raise money for the drought and the effects of the drought in Ethiopia. Now, Limeade is an ASX software company. I think they do deal with employee experience, so employee experience software company could be a good way to put it. And they listed in late 2019. I haven't been interested, still not really that interested to take a position in this company, but in recent times, the share price has taken a massive hit. And the valuation of this company has come down a fair bit. So I am keeping a closer eye on the financial state of the company. And if they can show any signs of growth, this company is looking attractive. But again, they have to show those signs. So in this video, I'm going to go through their Appendix 4C that they released in April and just talk about that and look at the charts. And really, that's about it for this video on Limeade. Hope it's short and quick. So before we talk about the Appendix 4C, let's look at some of the facts in regards to this company. Limeade's ticker code is LME, market cap of 158 million. And when you look at the revenue for a software company, you might think this company is good value. So revenue for financial year 2020 was 56.7 million. They were operational cash flow positive for that year of 3.8 million. So price to sales ratio of only 2.7. That is actually quite low for this sort of company. However, there are some reasons why this might seem like it's good value for this type of company. So if you do want to take or have a look at their Appendix 4C, they did release it on the 23rd of April. You can also look at some of the presentations they have released, go to their website, do all that sort of jazz. So why is this company looking fairly cheap for a software company? Well, let's have a look at their Appendix 4C and pay particular attention to the cash receipts. Limeade is an American-based company, so they do report in US dollars, and for the first quarter of their financial year, they did receive $23.6 million in receipts. Now, in isolation, that tells you nothing. You need to know the trend. So if that trend of receipts is growing quite strongly, I'll be backing up my truck and going all in on this company. However, I've given it a little bit away. Receipts aren't or haven't been growing that strongly since they listed on the ASX. However, in saying that, and even though they do have a lot of costs, they were operational cash flow positive for the quarter by 595,000. You might laugh at that size of that cash flow, but any sort of cash flow coming into the business is positive. They do have a little bit of cash on hand, so at the end of the quarter, they had $31.3 million of cash, no debt or very minimal debt. So the enterprise value of this company is around $120 million, and that makes it even a little bit more attractive. However, even though it is looking attractive in terms of valuation based off their receipts and the fact they were operational cash flow positive for the quarter and were for the last financial year, there is one reason I'm holding back from buying into Limeade, and we'll get to that in the next slide. And of course, that reason is shown perfectly here when you look at the receipts history of Limeade going back to when they listed on the ASX. So we have 6 quarters of history here. I would prefer a little bit more history. So typically I like 8 quarters or 2 years of cash receipts to know whether the trend is there or not. And usually I do calculate a compound quarterly growth rate of receipts, but here you can't really do it because it's quite lumpy. And in fact, I do believe it's just going sideways, up one quarter, down the next quarter, up the next quarter, then down, and then up. And in fact, the most recent quarter, $23.6 million, is equal to 2 quarters ago, and then a little bit less than 4 quarters ago. So at this point in time, there's no growth in receipts. And I really want to see growth in receipts to take a position in a company. So you could argue that this is not a growth company at all. So that's the main reason I will not take a position in Limeade at these prices, even though it does look like there could be some good value for this type of company. You have to take the whole picture. Look at the whole picture, and the one big cross against this company is this slide here, the growth or non-existence growth in cash receipts. Just as I am not interested in Limeade, neither is the market. And you can see that with the two charts I will show you. This is the weekly chart going back to when they IPO'd in late 2019. And the next slide I'll show you the daily chart. But the weekly chart shows you they IPO'd, or the share price was about $1.80 or between $1.80 and $2. And then we saw the share price take a little bit of a hit during the COVID-19 financial panic, and it fell to $1.20. But unlike most other companies on their ASX, the Limeade share price did not really rally off the COVID-19 financial panic lows. It went very slowly up. We saw a lot of companies double, triple in share price off those lows. Limeade hardly went up at all. The only rally you do see here is in October of 2020, when the share price went from $1.50 to a high of about $2.20 in 4 weeks. That was on low volume, and whenever I see a rally like this on low volume, that's not to get excited about, because usually the enthusiasm with the share price rising is there because of retailers, not fund managers. You want to see fund managers fueling the rally, because they're the ones who can make it a sustainable rally for the medium to even long term. And then from there, we've just seen the share price drop like a rock, particularly when they released or actually it was one day after they released their yearly report on the 26th of February. Share price did not fall much on the day when they released that report. It was the day after, on the 1st of March. So I'm not sure why the share price fell by about 30% on the day. A possible reason was a financial advising service put out a sell, and their members just sold this company en masse, because there's not a lot of volume with Limeade. So any financial advising service, if they put out a sell on a company with low volume, not much liquidity, if they run for the doors, run for the exits, that could put a lot of selling pressure in a company. So that's what could have happened with Limeade. For the fact that it happened one day after they released their report is a little bit weird in my book. So it's not really the report that caused this panic in itself or directly. It was something else. However, there were some negative things in that report. For instance, they have been losing customers over the past few years. Now, that could be intentional. Maybe they're cutting loose smaller companies which have lower margins and trying to win bigger customers with larger margins. That could be a philosophy they have in the company. However, this decrease in share price on the 1st of March was a sell signal, and the share price has been dropping ever since then. And when we look at the daily chart for Limeade, nothing to be really excited here. This goes back 6 months. We can see the higher the share price was the day this chart began, which was around $1.80, and the share price has been falling ever since. There was any sign of any uptrend during this period, so there's no reason to really be holding this company unless you're a buy and hold investor and you think this company is going to be a much higher value in about 5 to 10 years. And you can see that day where the share price fell 30% on the 1st of March. And that was a perfect time to get out, because the share price has not been higher since the close of that day, continually selling a good, well-defined downtrend. We have seen the share price stabilize over the past 3 weeks around about 60 cents. So this could be the start of a consolidation period, but a lot of resistance from anywhere from 60 cents to $1.80. And that we have to push through that resistance. So the longer any sort of consolidation period can be, the healthier it will be for a new uptrend in the future. What I'd like to see is some positive financial news moving forward. And once we get some positive financial news, that could be the catalyst for re-rating in Limeade's share price. However, we have to get through all that resistance first, and this downtrend has to come to a completion. Has it come to a completion? Well, I don't know. No one knows. We have good signs right now with the share price consolidating, but no one knows. We might see share price fall even further from here, and until we get signs that the share price is no longer falling, there's no reason to buy into Limeade. There is one reason why you might want to buy into Lionmade, and that is if you are a buy and hold investor and you think 60 cents is good value for this company, and you have high conviction the share price of this company is going to be significantly higher in the future. However, I am trying to get away from being a buy and hold investor. I'm trying to turn into more of a momentum and sentiment, or use a momentum and sentiment strategy. It seems like that strategy works for me. However, it may not work for you. I do believe everyone or every investor has to find their own light when it comes to investing. So I'm going a little bit off topic here. If you have any questions about Lionmade or anything else I've discussed in this video, leave a comment or a question in the comment section of this video, and I'll answer your question or comment ASAP or whenever I get the time. The last thing I should mention is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.